Okay, in this video we're going to talk about Forex resistance and support levels and how to set price alerts to intercept movements. This is lesson 10 in our 35 Forex lesson package. If you click right here, you can find this lesson. It's lesson 10 in our 35 lesson package from Forex Early Warning. So the Forex market is a support and resistance market. All trends start and end at support and resistance. If you have a currency pair that's at a strong support level and it stays there for a week, you can develop a new uptrend from that support level. So step one is to get your charts set up. And you set up your charts using some very simple exponential moving averages. We use exponential moving averages. They're very simple. It's just a red and green line, and it's a 5 and a 12 time period, and they're exponential moving averages. And so you can get those set up across any pair. This is the New Zealand US dollar right here, but you can set it up. Look, I got it set it up on 28 pairs. So you set up your charts, and if you want the instructions to set up those trend indicators, just click on that link right there, and you'll get a set of instructions as to how to set those charts up. It's a basic bar chart with 2 moving averages. All right. The first thing you want to do now is learn how to determine short-term support and resistance levels. So in this particular chart, this is a short-term chart. This is an M15 chart. You can see it's a 15-minute time frame. Okay, you can see it right there. 15-minute time frame in yellow there. So this is the movement that occurred today, and this is the pound USD on the M15 time frame. So the pound USD dropped, and now it's established a support level. This is your support level, and this is where you can set a price alert on one of the smaller time frames. Okay. The next thing you want to do is go over to the pound USD and determine the long-term support levels. So if a currency pair has a short-term support level, you can set a price alert there. This is an MN time frame. Excuse me, this is a weekly time frame, a W1 time frame. So if you have a long-term trend, this pair is trending down, you can check the support level here and even set a price alert here. When it breaks through, we'll show you how to enter the trade here in a minute. So you have the W1 time frame is trending down here. Well, really there's no support level here at all for a long ways. As a matter of fact, if you look at the chart, this is about 1,000 pips potential. So you have the yellow line on the right. This is 1.5300. This is 1,000 pips to get to the next major support level. So when you're trading with a high pip potential, that's what you want to do to have better money management ratio. Okay? And then you just take the levels and compare them. You take the short-term support level, compare it to the long-term support level, and to see what type of pip potential you have on that particular trade. If you want to be notified of a breakout, in other words, if you want to see if this pair is dropping below this price right here, you can set a price alert. Price alerts are easy to set. They're audible. And this is what the screen looks like for setting up your price alerts. You go over to your trading platform, and what you can do is just go to the alert screen. This is the MetaTrader platform. Go to the alert screen and just right click and click on create, and you can set a price alert there for any pair you want. Alright, back to the training here. So when the price alert goes off, remember you can have the price alert, it's an audible price alert that goes off and makes noise on your desktop or laptop, but you can also have these alerts sent to your email box and or your cell phone. Okay, so price alerts are fantastic for monitoring support and resistance levels for breakouts. Okay, next thing I want to talk about is a price spike. When you look at support and resistance levels, this is a support and resistance level. Okay, this is an actual level a long series of prices established at the same level. But sometimes when you look at a chart, you'll see a spike. So you see some resistance is set up here on this chart. But look right here, you can see a price spike. You see spikes all the time. Spikes aren't really that important. What's really important is the actual areas of support that get set up and then intercepting these movements with price alerts. So if you see a spike, not really that important. Occasionally you'll have a price alert goes off, a price spikes real quick, and it comes right back down and retreats. It's a fake out. So we'll show you how to enter trades to avoid these fake outs and avoid getting faked into a bad trade. We'll show you that here in a second. So spikes aren't very significant. You want to analyze the actual support and resistance levels, the established levels on the various time frames. For example, on this chart, this is an established support level. This is an established support level, so you would be expecting a reversal here back. Now, support and resistance levels are repetitive. If you look at the entire chart from left to right, so this is a D1 time frame. Each vertical bar is 1 day. So this is a lot of time here. This is about 2.5 months here. So you can see that you're starting to get some repetition. If you look at the entire chart from left to right on all the time frames, you'll start to see these levels start to repeat. So it hit the support level and it looks like it's bouncing off. This is significant. You can set your price alert right here, but look, this is about 900 pips of potential on a pretty big trend, the D1 time frame on the pound yen. And so just by knowing where these support levels are, you can start to form a new trend here. You can set your price alert here and then maybe intercept the next movement. And you have 800 to 900 pips of potential. That's substantial. That's a lot of pips. So these repetitive support and resistance levels, look for these on all the time frames, but particularly the higher time frames like the D1, W1, H4, and MN time frames, the larger time frames. Okay. And when a pair is cycling up and down between support and resistance like this, we call this an oscillating pair. To learn more about oscillating pairs, we have click on this link and learn more about currency pairs that are cycling up and down between support and resistance. Sometimes the market is not trending. Sometimes the market is going sideways, and you got a choppy market or pairs that are just stuck inside of ranges. And so, for example, this pair is the Euro Aussie. It sold off. This is the daily time frame. So this pair sold off for 3 or 4 weeks here. It sold off, it sold off, it sold off, and finally it stopped. And look, now it's forming what we call a cluster or a layer, zone, tunnel. There's a lot of different terminology for it. But when it gets inside this cluster right here, it's best to not trade it. But what you can do is you can set a price alert right here. So you can see it's got some resistance levels here. Set a price alert here, and if it breaks out going back to the upside, then you've got a huge amount of pips that's potential to trade while it's rebuilding its trend and deciding what direction it wants to go. Theoretically, you could set another price alert here below the cluster, and if it drops, then it could reestablish a new trend. But when it's inside this cluster, very difficult to trade. You can either stay away from it or only do very short-term trades. One thing you can do with a pair that's in a cluster, like it's in a cluster here, you can actually set 2 price alerts for movement in either direction to monitor. Here's an example. So this is a smaller time frame. If this pair is consolidating and building a cluster on a smaller time frame, you can actually set 2 price alerts. You can set a price alert here and a price alert here. So you have 2 price alerts on the same pair. In this case, if this alert goes off, this is about 100 pips of potential going back up. And if this alert drops, there's about 200 pips of potential going in the direction of the trend. So if you analyze a currency pair, using multiple time frame analysis and you can't figure out what direction it's going to go, then set 2 price alerts and you'll be able to catch it going in either direction. As long as you have a lot of pips going this way and a lot of pips dropping, as long as you have a lot of pips to potentially capture in either direction, this is called a straddle alarm. It's 2 alarms on the same pair. Okay, so this is a great idea. It's called a straddle alarm, and very few, if any, I'm going to say very few, almost no Forex traders do this, but you can actually catch movement in either direction on all 28 pairs with the straddle alert. Okay, so we're setting all these price alerts at support and resistance levels, but what do you do when the price alerts go off? Well, what you can do is you can look at this great tool that we have. It's called the Forex Heatmap. And so when the price alerts go off, let's say you have a price alert that's set on the British pound against the yen, the pound yen. Well, if you have a price alert set on the pound yen, you can come to the Forex Heatmap and you can look here and you can see that the pound is strong and the yen is weak. Therefore, the pound yen's moving up pretty strong here. So this will verify your trade. So if you set a price alert on the pound yen right here, right at the first level of resistance on the small time frames, and it starts to break to the upside through your price alert, and you're not sure if you should trade it or not, just go right over to the Forex Heatmap. This is a live indicator on our website that tells you what pair to trade. And it's easy to read. Reading the Forex Heatmap is not difficult. You can tell quickly that the yen is weak and that the pound is strong, and that you can enter the trade on the pound yen that you set the price alert for. Okay. One thing you can also do is draw support and resistance levels on your charts. It's easy to do. So if you want to figure out where this level, want to eyeball where these levels are on this chart, all you have to do is go to your trading platform, click on the crosshairs. Let's give that a shot here. Go over here to the crosshairs, set that up, and now you have a tool to look at your price alert levels. So you know that today's intraday level is at 70.95 on the New Zealand US dollar. You can go to another time frame. You can see the current breakout point, which is this pair broke out today, and then you can see the next resistance level here. And you can zero in on those numbers on your price scale. Over on the right hand side, you can see those numbers clearly right there and right there. Here also. So if you want to have a great tool for drawing Forex support and resistance levels, just go to the MetaTrader platform, take it off the arrow, put it on the crosshairs. They're called crosshairs. And start using it on the charts. You can see this breakout level here, and then you can see the next resistance target. And then, so this is 112, this is 113.75, so you can tell immediately and quickly that if you decide to trade this pair, it's got about 175 pips of potential on the this particular time frame. This looks like the daily time frame here. So we also have a complete library of support and resistance examples. It's literally 100 examples. If you want to go look at this, no problem, and you'll start to see all types of examples of support and resistance right here on our website to show you how to measure the support and resistance levels and price targets for various currency pairs. We do trade 28 pairs at Forex Early Warning. So you always want to know the short-term and long-term support and resistance level, and then you want to compare those numbers. You always want to set price alerts for monitoring the pairs, for breakouts, and for price movement. And if you do this and combine it with our great entry tool, the Forex Heatmap, you'll be able to enter trades consistently across 28 pairs. So this is one of our 35 lessons. Go to forexearlywarning.com and find this lesson and review it. And this is Forex support and resistance levels and setting price alerts.